following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This one is by Christian Larson. Live in faith that the whole world is on your side so long as you're true to the best that is in you. Market-wise, let's take a look at it out here. We had the Dow Industrials down 21, NASDAQ off 3, S&P's flat. Gold contract up $2, traded at $1,244 an ounce. Now, gold, folks, okay, had broken the B point of an ABC structure on the way down. You get a price projection, A to B equals C to D, of 1224. You know, we got the European Central Bank meeting this Thursday, and I expect what you're going to have is that, yeah, they're going to come down on interest rates slightly. What that will do is spike gold down, finish off that A to B equals C to D structure. Silver. We take a look at silver now. Silver has been basically holding this low. I suspect it's going to break it. Why? Well, this is what we have. Silver is at 1878 right now. The low spike low out there is 1768. We hit 1860. The spike low is 1868. We hit the 1871 today. Last Friday rather, we come now at 43,000 contracts, and we hit 1861. It's hanging down at these levels way too long. When I take a look at what the gold contract wants to do, where silver is right now, and then I take a look at the continuous contract in silver, the way the continuous is lined up, it's not the end of the world, but it's 1818, I believe. Yeah, 1818. Right now at 1878. 1818, folks, was the low of a year ago in silver. That's where it looks like it wants to go. If we go over to the SLV, if you want to see this correlation, and you're looking at the equity market versus the future market, the SLV is the iShares Silver Trust. What you have is this. We are at $18.10. We put this up on a monthly basis. What you're going to see out here is that 1775 was the low from June of last year, and right now we're at 1810. The volume's light. We're coming into a light volume, no doubt. We came in last month with 116 million rather. Prior month, 126 million, and you're going to do 284. So we're coming into the gold market and the silver market exactly how you'd like to come into them if you're a bull. Why? Because we're going to have A to B equals C to D. You're going to be at the gold market, it's going to be at the December lows. Silver market's going to be at the June lows of last year. It'll be exhaustion move down there. It'll be 100% move or move. Dollar, King Dollar. And what King Dollar is all about right now, folks, is going to be, it looks that it wants to basically not only take off, but take off of those April swing highs. The April swing high, the dollar index right now is 80.59. The swing high in April is 81.65. We came off that low with a vengeance. You came off the low of 78.90. That low that was generated out there on May 8th has nice expansion up. I suspect we're going to take out these swing points on Thursday and just run right up. I expect huge volatility, folks, on Thursday. Bond market. What do we take looking at bonds? Okay, so what we have with the bond market is this. TYU4. Okay, bond market today, the 10-year pulled back 17 ticks, 1.2 million shares, contracts traded rather. And this can get down to 124.05. You know, we'll see whether it wants to get lower. You are pulling back, though, at lighter volume. We went topside with 2 million contracts. We're going downtown with 1.2 million contracts. We go into the 30-year. We take a look at the 30-year, what you have with the 30-year. She came down full point and 1 tick. We did that with 377,000. She was going topside with 490. Same deal, coming back down with lighter volume. Let's go over to the euro. We take a look at the euro because it's going to be all about good old Mario Draghi and the euro on Thursday. The euro is at 136.25. Your lowest swing point is 134.79. That's where it looks to me that it wants to fly to. Now, we were talking about bonds and in the last hour, and one of our targets brought up to the point, and this is a huge point too, by the way, folks. Okay, so dollar index wants to go higher. Gold wants to finish off its ABC structure on the way down. Silver wants at $18.18. That's what it looks like. In that context, what do bonds want? Bonds, folks, want higher price. Now, watch. That's our whole technical setup. But now let me give you the fundamental setup. The fundamental setup, if in fact the rates do go down in Europe, they put them down, that's going to put euro down, our dollar up, because rates are what it's all about. But watch if you're watching Tiger TV right now, you're looking at the 10-year bond rates across the world. So the fundamental question would be, do you put your money in the United States and get 2.5% on a 10-year, and you have a dollar that's rising, or do you go to France and get paid 1.8 on the same 10-year, and the euro is going down, or do you give your money to Germany at 1.4, and euro's going down? Well, no, let's go to Italy. Italy's paying 2.9, and the euro's going down. Better yet, let's go to bankrupt Spain. Give it to them at 2.8. This is pretty sick. Hold it. Look at this. This is really sick. So Spain's paying 2.8. Spain's in trouble, folks. Portugal's paying 3.6. You can see the context here. The context here, folks, is that, and this is a fundamental deal that I'm talking about right now. If you knew nothing about technicals, and we're strictly talking fundamental, and every one of you just answer that question yourself. Would you give those countries your money? And remember something, when you lend to the country, you have to lend in their currency. So what ends up happening is that when folks are lending to the United States, if they're not U.S., if not in the United States, they have to convert their currency into dollars. So they convert it into dollars, they lend it to the Treasury at 2.5. That rate, folks, looks so much higher, it is unbelievable. It's going to be particularly higher if, in fact, that dollar gets up to that 81.50 and the euro is going down to the 134. Because the euro, if, in fact, it goes to the way I think it's going to go, to that 134, that is only the beginning. That means that the euro is on a trend to go back down to the 120 area, which I'll put this up on a much longer basis. The 120 area, folks, is the low of 2008. It's 123. And it's been a consolidation. So if we go back to 08, you had 123. Then you bounced into 09 at 151. Couldn't handle it. It broke the 120. Goes down to 118 in 2010. June of 2010, 3 years ago. Bounces again to 149, lower high. In May, took a year to get back up there. Took another year to get back downtown. Oh, this is pretty cool. Oh, check this out. This has been a year run every time. Whoa, this is a trip. Okay, so that's a trip. Okay, hold on, let me get... Yeah, it is. It's been a year run every time, meaning up to down. Last low was on July of 2012. Oh, so this is 2 years on the way up. So check it out. 2 years on the way up, and it couldn't even do a 50% move of the move. Let me just see exactly what this is. 50%. Let's see what it did. No, it did a 0.618. So it did a 0.618 retracement. So the last low on the euro was July of 2011. That was 120. We got over the 138. The 138 would have been a 0.618 retracement, which is a strong retracement, by the way. Okay, failed though. Failed. It couldn't hold it. I'm doing this on a monthly. Couldn't hold it any month. We're below that now. So the way that sets up is that sets up that, number one, it wants to, on a longer-term basis, go back to the 120. But number two, it doesn't mean it's going to break it. That's how that's set up. Because if you do a 0.618 retracement, what you should have, get back to it, test it, it's going to try to make it run again. Bottom line, though, volatility, you're going to have volatility in spades this coming Thursday. You stay right there, folks. I'm Mr. Andy Hector coming right back with us. We're going to be talking commodities. We're going to be talking about his webinar he's doing this Saturday. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 21, NASDAQ off 3, S&Ps were flat. Now let's go over to our man, Mr. Andy Hecht, folks. Okay, each and every trading day, Tuesday, Thursday, 3 to 4 Eastern Standard Time. Andy has an outstanding show. Now, coming this Saturday morning, okay, at TFNN, 9:30 to 11 o'clock, Andy's going to be doing a workshop. It's a special event workshop. It's going to be on energy opportunities in the summer of 2014. This workshop, folks, is only $99. When you sign up for it, you're going to get a special 7-page report that Andy did. You get that right at your desktop immediately. The workshop itself goes from 9:30 to 11 o'clock Saturday morning. If you can't make it live, it will be archived. Everyone that's there it'll be on their page for a full 30 days. Andy Hecht, what's going on?
Hey, Tom. How are you?
Hey, congratulations.
Yeah, well, tomorrow we start the Real Tough series.
That's a beautiful thing, man.
It's a beautiful... I wanted to play the Blackhawks.
I know, I did too. I know.
Hey, 20 years ago, we haven't won the Cup in 20 years, so at least we get a chance.
Yeah, it's much easier for me rooting for you, though, playing L.A. than the Blackhawks.
Oh, yeah. I'm actually
It's going to be a heavy tournament, man.
Well, I think my plans are that after the workshop on Saturday morning,
right,
I am hopeful that I'm going to get in my car with my friend and drive to L.A. and go to Game 2.
Oh, sweet.
I'm going to try. I'm doing my best. I'm calling in all favors here. Yeah.
Good.
Should be fun.
Oh, it's going to be awesome, man.
Yeah, it should be a good series. I mean, they have the best goalie in hockey, in my opinion, L.A.
Yeah.
This guy, Jonathan Quick, is very good. But ours isn't too shabby, and we'll see how it goes. At least we're there. That's how I look at it.
Oh, big time, man.
Yeah. How are you doing?
I'm doing good, man.
Good. I've been listening to what you're saying about Thursday. I totally agree. Thursday's going to be a crazy day.
You know what's so interesting, Andy and folks, is this, Draghi's always full of it. You know what I mean? It's like, okay, so... he's jawbone forever. And I mean, this time, though, it looks like he has to do something because the economy over there is done. I mean, do you know what I mean? So it's like, okay, is he actually going to get down on rates, or is he still going to jawbone tell people, well, next time I'm going to go down,
No, I think he's going down, and I think the dollar's going to explode.
Yeah, that's what it looks like, man.
That's what it feels like. I mean, that doesn't bode well for the Precious. We'll see.
No, it doesn't.
I am flat. Now, let's talk about Precious for a minute, but not about the prices.
Yeah.
I got a call during my show and from a guy, Jay, in Boston.
Okay.
And he pointed out that there's a new ETF product out there.
Yeah.
It's called the OUNZ. And this is a physical gold ETF product. In other words, when you buy this, you can take delivery of allocated gold in London. Very interesting.
Yeah, right.
Very interesting. I mean, it doesn't have critical mass yet. There's some volume, but I don't see a net asset value yet. But this can be a very interesting... and when gold does come back, I would imagine that this will attract some interest. And they priced it not like the GLD. They priced it more like the IAU. So it's like a $12 and change item.
No, it's interesting. I know Alex, the guy that owns this.
Yeah.
I know Alex Merck.
Okay.
And he's a great guy. I mean, he's from London originally. I met him and his son. And it'll be interesting to see, he had one of the first currency funds that were correlated with gold in even 2003, 2004. I met him up in New York. So it is going to be interesting to see if he can get the traction on that.
Right, if he can get traction. If he gets traction on this, I'm sure he'll do a silver one.
Yeah, no. There's no doubt about that. You know what I mean?
So it's interesting. It's something new. We keep our eyes on it.
Right.
No question.
Right.
And he's got a patent for this, whatever that means. But it should be very, very interesting to keep our eyes on.
Yeah. So expense ratio is 0.4%. It's not bad.
Right, which is the same as GLD. It's cheap.
Right.
It's cheap. In the world of ETFs, you know, they range from 0.4% up to, you know, crazy numbers.
Yeah.
So this one is not an expensive one. I have a feeling that it will attract some of the people who are worried about their ability, you know, about the, you know, what underlies these ETF products.
Well, hey, check this out. You're going to love this one, folks. I was going to save this one for myself for a bit, but this is kind of interesting. Okay, so the gold market in general, right? You know, I've been waiting that whether it's going to be the gold companies that are basically going to start hedging the deal out, right?
Uh-huh.
But it wasn't a gold company, folks, that start hedging. What did happen is that Ecuador turned around, made a deal with Goldman Sachs last Thursday, right?
Oh, I saw that.
Yeah.
Yes.
So it's not a huge deal, but so here, this is how the deal shook out, folks, okay? What, 466,000 ounces of gold, and that value at that point, folks, was $528 million. But check this out. This is how crazy that sovereign countries are in large institutions, okay? So the way the deal is structured, no one knows the full implications of the deal yet, okay? But this is what it is. When I first saw it come across, I started looking, I said, okay, that's going to affect the market, and that's not enough contracts, ounces, folks, to do anything. I mean, that's like an hour in the futures market, right? You know,
right.
It's really not that bad. But this is what I found so intriguing, that because I was trying to figure out, okay, is Goldman going to go long a shot, right? You know, on the deal, right?
Mm-hmm.
Well, guess what, folks? Over the course of 3 years, Ecuador, they figure they're going to get paid. They're going to make from $5 to $8 million. It's like, oh, really? You're going to make 5 to 8, and they're all happy about this. They're going to make $5 to $8 million. I mean, how much money do they need for basically churning over 466,000 ounces of gold? So I'm saying to myself, okay, hold it, man. The most logical trade would be that Goldman's going to hold that gold, right?
Right.
And pump it up. They don't have to. I mean, when I looked at percentage-wise, I'm saying to myself, why would you do that? Why would you even give someone your gold for, let's say, $8 million? Let me see. You see what I'm saying, Andy?
Yeah, no, I do.
Isn't that crazy?
It doesn't make a lot of sense, and I'm trying to figure out exactly what it all means. At first, when I read it, I thought what they were going to do is just sell cash gold, deliver it to Goldman, and then buy it back in the forward and earn the lease rate.
Right.
For gold.
Right.
Which a lot of countries do all the time. I used to do that trade with countries from the Netherlands to, you know, Hungary to South Africa. That's a very typical gold. But what I'm surprised is it's getting so much press.
Well, here, let's walk through that again for a second, just to make sure that that's not it. Because when you buy, the trade you just set up, right? When you buy that back, though, don't you have to buy it back as to what the gold is at, right?
You buy it, well, I mean, the way I've done it in the past with these governments is they sell me gold today,
right?
And I do a forward contract to sell it back to them, you know, at a point in the future. They get cash, right. I get the gold, but I'm giving the gold back to them, you know, let's say a year, 3 months, or a year, or 3 years in the future.
Yes.
Which gives them cash.
But you're giving it back to them at a market price, right?
I'm giving it back to them at, you know, a differential from today's price.
Yeah, and see, that's not happening with this one. Well, that's what the press is saying. What the press is saying, you stay right there. What the article saying, folks, is that they get it back. They get it back. Period. Okay, at the same price. That's what they're saying. No, they're not. There's not a price structure inside it, but they're making short money. Here, stay right there, folks.
Sure.
Andy and I come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Andy Heck, Tom O'Brien. Appreciate you growling and prowling with us out here. So, Andy, I got the story right here. So, what they're saying, folks, is that for 3 years, they're going to get the gold back, and they expect they can make from 16 million to 20 million, not 5 to 8. 16 to 20 million, which is still cheap money. But when I look inside here, I think this is where they're going to make the money. So check this out. So what they did, folks, is this. Let me just show this. This is pretty cool. Okay. Ecuador's central bank, stripped of its autonomy in the constitutional referendum a year ago, took power in 2007, says it invested the gold with Goldman Sachs in return for assets that can be liquidated within 7 days. The country will get the same quantity of gold back 3 years from now, expects to earn a profit from 16 to 20 million from the deal, it said. What's interesting there, Andy, right? Could you imagine that you're still in the business? And it wouldn't matter, folks, if they made anything on the gold, that you just had $585 million to invest, right?
Right. No, well, it's a very simple transaction, Tom. Can we go through it step by step?
Yeah.
What they do is they sell cash gold to Goldman, and they deliver it.
Right.
Goldman then turns around and sells them back 3-year gold. And let's say the interest rate, current interest rates for 3 years between central banks and institutions, let's say it's 2% for argument's sake.
Right.
Okay?
Yes.
What they do is they sell it back to Ecuador at 1%. And they pay a lease rate for that gold, which is the difference between the 2% and the 1%.
Right.
Ecuador then takes that cash and invests it in instruments that will yield more. So where they're making the money there is on the interest rate differential between what they're borrowing money, their gold against, and what they're investing those proceeds in. It's a very standard transaction. What I'm surprised at is why it got press.
Well, yeah. See, the way I understand what you're saying there, but it looks to me like they want to take that 585. I think they're going to get taken to the cleaners. I think they're going to take that 585 and invest it in stocks or something.
Well, they didn't mention what they're investing in.
No, they didn't. Exactly.
They have 7-day liquidity. I would imagine, in any instrument, we all have same-day liquidity, so I wonder what that is.
Yeah.
But very interesting. I'd like to see the other side of the trade where they're investing their money.
I know. For sure,
right.
Man.
That would be it. Now, that would be more interesting than the gold. But they still have exposure to the gold price because they're selling spot and buying 3 years forward.
Right.
So they're not really losing their reserves. But they can get clipped. They're expecting to make $16 million. If the assets they're investing in go down in value,
that's my point.
I would imagine they're going to lose. They could lose a lot of money.
Right.
And I would imagine that Goldman could make a lot of money. Well, I would tell you, the one thing that's for sure in this trade is that Goldman will make money.
Totally, that's my point.
That's for sure.
And it's already been made. That's why when I looked at it, I said, "Oh man, they had something to sell them. Here's the transfer. Here's the sell."
Right. And then Goldman will make more money because then they'll take that gold and they will use it to do producer hedging.
Right.
They will lend that gold on to producers at, if they borrowed it at 1%, they'll go lend it at 3%.
Right.
So they make money every which way. Heads I win, tails you lose.
Not bad. Hey, so let's. If I want to continue over the commodity market, but what I'd love you to do is give us a rundown of what you're going to be looking at Saturday morning.
Sure. I've been spending a lot of time this week, and I will up until the close on Friday, when I'll be on with you or on for you. Or
yes.
We'll see how that goes. I'm looking at the fundamentals, the technicals of oil products, natural gas, and coal. I think that although they're pretty much sleeping at the moment, there's going to be some incredible opportunities this summer. So I'm going through all this. I will outline all of the fundamentals and technicals during the webinar.
Yes.
And then we will have some trade recommendations specific to the webinar in each sector. And we'll go through it,
Nice.
and anyone who signs up can feel free to email me at andy@tfnn.com and ask any specific questions that they want me to cover during the webinar, and I will make time for those questions. And I will do some research on stocks that they might have in their portfolios or ETFs or even commodity positions in futures or anything like that.
And so the way you sign up, folks, just come over to our website at TFNN. You can see it right in the front of the carousel. Energy opportunities for the summer of 2014. It's only $99. Saturday morning, folks, great way to spend the Saturday morning, 9:30 or 11. He will get you out of there by 11. It's a beautiful thing.
That's right. I'll be out of there by 8.
Yeah.
I'm going 6:30 to 8. So I'll be up early.
Thank God the Rangers won. I like it.
That's good. Let's talk about something we never talk about.
Okay.
Let's talk about iron ore.
Iron ore. Oh, I like iron ore. Okay.
Very interesting. Iron ore prices have really slid, especially
Yes.
with China's weakness.
That's right.
You know, iron ore, for those who don't know, is you know, they use it to make steel.
Right.
It's the basic building block for steel, basic commodity.
Yes.
So what's interesting about iron ore here, and where the opportunity lies, not today but in the future, is that iron ore now has slipped. I mean, the current price for iron ore is something like, you know, $92 or something, a dry ton.
Yes.
Now, Rio Tinto produces iron ore at $20 a ton. They are by far the lowest cost producer. Everyone else in this space produces iron ore at the current market price or higher.
Okay.
So they're losing money. This is a great opportunity for Rio Tinto to clear out the market, produce a virtual monopoly on iron ore, and then take the price up later. So, you know, if we see the price of iron ore drop, Rio Tinto stock might be a hell of a buy.
Yeah, no, that's interesting. What about Valley?
Yeah, Valley's a producer. I'm not sure what their production cost is. I have to look into that, but I know a lot of the others produce it much higher. And I would imagine, that based on, you know, the size of the companies and the interest, that Rio is by far the lowest cost producer. And I think that, you know, they're kind of, you know, their chief executive was out there saying he's worried for the rest of the industry. But I don't think he's too worried. I think he's kind of sitting pretty here with $20 a ton production cost. That's just printing money.
Yeah, that gets interesting then. No doubt.
And then as they fall by the wayside, an opportunity could come. You know how these commodities go. They fall below production cost, people disappear, and then you have one dominant producer in the market who basically can set the price.
Yeah.
Should be very interesting.
So let's just see. So, yes, I'm with you there, because what does happen, you know what is interesting? You see what's happening with nickel. I know nickel's not something we want to trade, okay? But what's intriguing here, folks, is that, you know, nickel had exploded topside. One of the main reasons is that, I guess, was in the Philippines, right? They decided, Indonesia, thank you.
They had a mineral export ban.
Yeah. And what they were hoping is that, you know, folks would open up smelters very quickly. But the bottom line is that you can't open a smelter overnight.
You can't open a smelter overnight. And the two biggest producers of nickel in the world, it was a perfect storm for the nickel market, because the other big producer is Norilsk Nickel in Siberia, in Russia.
Right.
So, you know, you have the Russian sanctions and all the stuff with the Ukraine. You have Indonesia, who's a huge producer, you know, banning mineral exports. And when they are allowing them, charging huge duties. And the bottom line is, you need nickel to galvanize, you know, for building. And China uses a lot of nickel, so they're getting squeezed.
Interesting, man. Yeah.
Eventually, China will build some nickel smelters. I can promise you that.
Oh,
or they'll own some in other places.
There's no doubt.
Yeah.
So let's see. Let's go a bit of corn.
Oh, okay.
Oh, hey, you know what happened here? Yeah, you know what happened today, though? Hey, check this out. Let's go to coffee first, because we were talking about, you know, coffee folks, you know, had spiked in a dramatic way. You know, it backed off. But finally, what ended up happening is that I saw this out here today, that the Schmuckers, which I didn't know, Schmuckers is one of the largest producers, you know, retail.
Yeah, that's Folgers.
Of coffee, yeah.
Folgers. Yeah, they raised prices. They raise prices just as prices start to come down.
I know. That's
a delayed
really cracked
reaction.
Me up. I said, what a trip this is, man.
Yeah. Well, rains have eased the drought damage of some of the coffee plants in Brazil.
Yes.
And we won't really know until late July how that coffee crop has turned out. So coffee has a little bit of downside here. I think the next support is around 160.
Okay.
We broke through a recent low. I think we broke through the March lows today, marginally. We closed a little bit above there.
Yeah.
It's not going back to $1.15. You know, we could go down to 160. You know, if the crop is good, maybe 150.
Right.
But you got to scale down by this thing. And then you have, you know, you turn around and you have a potential El Nino, which could, you know, screw up the Brazilian production next year.
Yeah.
So, interesting.
It is. No, it is.
Interesting.
It is.
And grains in general are now in wait-and-see mode because the USDA monthly crop report comes out on June 11th, and that will probably paint a very rosy picture for supply.
Okay.
And that's what we're seeing now. We're seeing people get out of positions. Look, corn is down 12% since the highs. Wheat is down 17%. Soybeans not really so much down because of low inventories.
Interesting. Listen, folks, come over to our website at TFNN. You're going to see Andy's webinar right in the front page. It's only $99. You sign up now. You get the report, 7-page report right here. Saturday morning, outstanding webinar, 9:30 to 11. Andy, you have a great night, safe night. Of course, we look forward to, we'll be on Friday.
We'll talk to you Thursday.
Andy Haas has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Caterpillar up 73, had Coke flat, Oxy was up 48. We had Big Blue down $1.32. Let's go over to Big Blue, because Big Blue been struggling for quite a while. You have a buyback that's extraordinary, and they're still trying to, basically, still can't keep the stock up. So we're at 184, and this is building cause once again to trying to get out of this 176. You know, it had that counter trend bounce up to 192. So we'll see where that shakes out. And they're spending a fortune on the buyback, folks, but it's not helping their situation at this particular point. I want to see what this one is about. So IBM said the U.S. Security Exchange doesn't plan to recommend enforcement action against the company after probing how it reports revenue from its off-site cloud services. The SEC concluded that the investigation into IBM's accounting methods last week. The probe, which the company learned about a year ago, examined sales for services delivered over the Internet, such as storing customers' data and software applications. Let's see. The company's cloud revenue rose more than 50% last quarter from a year earlier. The cloud offerings delivered as a service are now on pace to generate $2.3 billion. It doesn't say why they actually even, claiming they were looking at it. Interesting. We go take a look at Walmart, WMT, Walmart out here. She is at a 76, 71 level. This little baby here. Now, what's interesting about this today is that you had a slight expansion of volume, and you couldn't get to a higher high. Someone is dumping Walmart. Walmart had gapped away, folks, on the 15th of May. Came down with 13 million shares. Went topside again with 4.3 versus 13. Goes sideways today with 7, but this is deviant. It's sideways to down. And in fact, if we look at, let me just see where this was dumped. Yeah, these are some big numbers. Oh, look at this. This is interesting. So someone, that was a late trade. 505. It's kind of hard to tell looking at this baby. If we go take a look at some of the filings, actually, what I want to do is go over to the GLD and take a look at these filings. We're going to look at right now, folks, is inside the GLD. The last filings were out there, and see if we get any new buyers versus new sellers. Paulson, John Paulson and Company, they're still the largest owner of the GLD. They own 3.9%. That's 10 million shares. And in the last filings, this is interesting. We had a new buyer here. Someone bought 3.3 million shares, which is 1%. That's a big number. New Jersey, Hammerl Associates. That is definitely a big number. Yeah. Okay, so that was. Pull this up again. Oh, wrong one. GLD. Sort by size. Okay. So then you had Schroeder come in. They bought 1.6 million. You get new buyers here. This is kind of interesting. Okay, so we'll see how many sellers we have. We have Stellman, 827,000. The rest of them are all in the thousands. So 3 million, 1.6, 1.5. Those are the big ones. We take a look at the sells. Yeah, it's a heads up. The sells, you have 1.9. Sashakwana, man, they're getting out of everything. This is interesting with the Sashakwana deal. When we pulled up earlier. What was I pulling up? They were getting out of, I'll find out what I pulled up earlier, but they were getting out of that too. BNP Paramus, they need money. they were getting out. They sold 1.8 million. They're the ones that they're going to get fined $10 billion. CTC, 1.4 million, and the Swedish bank is 1.1 million. So you got 1, 2, 3, 4, 7 big ones. 3, 4, 5, 6. Yeah, it's a toss-up. That is definitely a toss-up. SLV. We'll go over to the SLV and see what funds are buying and selling the SLV. Inside the SLV, oh, look what they did. Oh, this is pretty cool. Hey, check this out. Oh, this is cool. Andy Heck will love this. They swapped out, Susquehanna swapped out gold for silver. Oh, look at this trade. Okay, so Susquehanna came into the SLV and bought 3.4 million shares, and they upped their silver to 2.4%. Interesting, man. That's a good number. I like that. So right now, they actually up, 3.4 million they bought. Citigroup came in with 475,000. Stifel, Financial, Millennium. Those are the sells. Those are the buys, rather. The sells was Credit Suisse, 3 and Morgan Stanley 1. Now, see, what's intriguing is that when we put up the buys versus the sells in silver, silver definitely looks a little bit better. So let's remember 3.4 million. That's at $18. I had to see this. And this is a full swap out. We're just going to speculate. $18.10. GLD. I think they swapped the silver for the gold. Gold for silver, rather. Okay, they sold 1.9. Well, it's a lot more than that. So they put some. Oh, thank you. That was thanks, Terry. That was Apple. It was Apple. They were selling Apple too. Susquehanna was selling Apple. Okay, so what they did here is this: they sold 1.9 million of the GLD, which is at 120. They bought 3.4 million of the SLV, but it's only at $18. So they pocketed a bunch of cash too. Interesting, though. The good news there is that, in that SLV, it has been stronger. But I just suspect what we're going to have is this, is that on Thursday, I suspect what you're going to see, we're going to have this spike down currency-wise. And that spike down currency-wise, folks, the market itself has not been paying attention to the dollar, period. The market hasn't been paying, well, the S&P hasn't been paying attention to anything. It just grinds higher. This fast currency move that's coming, I suspect that is what is going to basically push that S&P lower. What we have out here, we have on the daily now, the weekly, all of the above. You're grinding higher, but there's absolutely zero juice behind it. After the close out here, was it Tibco Software that got smoked? I think it was Tibco, TIBX. TIBX, that's down about 11% after the close. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Real! Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program, whether it's Tom O'Brien. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you
Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
Yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Natalie Goldberg. Follow what you love, and it will take you where you want to go. That's a fact. Market-wise, let's take a look at it out here. We had the Dow Industrials down 21, NASDAQ off 3, S&Ps were flat. Gold contract up $2.30, trading at $1,246 an ounce. Silver up 7 cents at $18.81 an ounce. Platinum down 3 at $1,432 an ounce. Copper $3.18 a pound. Light sweet crude flat at $102.82 a barrel. Bonds, you had the 10-year down 16 ticks at 124.12. 30-year off a full point at 135.11. King dollar down 100 ticks at 80.59. You get the euro up 29 at 136. And the yen is trading up 15 at 102.53. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We are at 1924.30. The high that was generated yesterday was 1925.88. We did that one at 548 million. It's still hanging up here. We're at 650 million today. I expect that 1925.88 wants to get tested again and again. It wants to get tested again. That's the bottom line. Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow Industrials is this. Dow went sideways today. Is still at the highs. You're at 16,722. Your high is 35 and 56. The 56 high was yesterday. The 32 high, 35 high was on the May 13th number. I suspect yesterday's high is going to get spiked once again. NASDAQ Composite. What do we have inside the Composite? Composite really sideways move, 42.34. The Composite looks like it wants to spike, folks, the April 3rd and April 2nd high. That'd be about 50 points higher. That swing point's hanging out there. Doesn't have the juice, no doubt. It's 1.6 billion versus 1.6 versus 2.4 on the way down. So it doesn't have the juice, but I suspect it wants to get into that area. The NASDAQ 100. Now, the NASDAQ 100, the number for the 3 Qs is 91.36. We hit 91.36. We've failed, not today because it never hit it today. We failed the last 2 days, however. We got over it, closed under it, all of the above. That's going to go after it once again because they're hanging right at those highs up here. Gold contract. We take a look at gold now. This is what we have with gold. Okay, so gold right now is at 1240.20. That was the low today. 1246.20 is what it closed at. We did 85,000 contracts. We had already broken the B point with volume. That A to B equals C to D, folks, has a 1224 number on it. And bottom line, I expect that we're going to see that number, and we're going to probably see that number on Thursday. Why? We're going to start talking about it. I got a question in the den right now. Do you think they're waiting for Draghi and the European Central Bank? Yeah, that's exactly what the market looks like it's waiting for. But we're going to get into that and bisect it and dissect it. So that's good. It's going to be about the euro, it's going to be about the dollar, and it's going to be about metals. We're at 1246. What you have is that 1224 is the A to B equals C to D. The low of the December contract right here is 1191. That is actually, that's opened. I expect we're going to have a highly volatile day on Thursday, folks, big time. Now, let's go. I'll come back to the bonds. I'm going to go right over to the dollar, and this is why. The correlation inside the euro, the dollar is set up like this. The dollar right now, this is the dollar index, is at 80.57. This little baby is coming into your April swing point with some juice. The April swing point out here is 80.77. We got to 80.71 today. I expect what you're going to see is that this is going to be a rocket ship right up to the 81.65. And it very well can happen Thursday, if in fact the European Central Bank actually does something. What we've seen in the past is that there's been a huge amount of jawboning and they do nothing. They basically keep continually saying, we're going to have stimulus, and they don't put it in place. This just came out right into the close today, which was really interesting. And what it was is that they're saying that let me go through the rest of the market first, and I'll bring you back to this. So bottom line is that I see the dollar going up, the euro, let's bring the euro up, because the correlation is that they bring rates down, the euro will go down. The euro is at 136 right now. Your swing point down is 134.77. I can hit that in a heartbeat. Gold pulls back to the lowest swing. Now, in that type of scenario, which is going to be really cool, is this, folks, is that the gold contract is finishing off at ABC structure on the way down anyway. The dollar wants to get to those highs. We get those moves, you get action. And what the action would be, I suspect, is this. The action would be that you see gold bottoming out down there, because that's 100% move or move. The dollar would be 100% move or move going up to its April highs. That in itself, the fast currency move, I expect that's where the S&P, we're going to see some spikes that are going to be incredible. And when this comes out, so it's going to come out at 1:45. That's European time. I got to figure this out. So if one of you targets give me it's at 1:45 European time, and then at 2:30 European time. I think it's going to be like 8:30 in the morning, right? I think it's about 8 hours. He's going to have a press conference. Bonds. Let's go over to the bond market. We take a look at the bond market. What we have with bonds is this. We go to the 10-year bond first. What we have with the 10-year pullback, 1.2 million shares. That's not enough. That's just building cause for higher price. We went topside with 2 million. We are at 124.12. And what you can do, you can get into 124.05. 124.05 is where we broke topside on this baby. It can get into that in a heartbeat. We go take a look at the 30-year bond. We came back with 345,000 contracts. And this baby can get into, 135.10, 135.04 is really the number. We'll see whether it gets down to the lowest swing. The lowest swing is 134.12. We'll see how that handles it. If we go over to the TLT and you want to see the correlation inside the 20-year plus, the TLT today pulled back with 12 million shares, and she's coming into 11.5. So the TLT has some juice on the way back out here. She's going to need more than 12.2 to break down. The reason being we're at 111.57, and she's going to be coming into 12.7 million, and that 12.7, yeah, 12.7. 12.2 is a lot, though. There's no two ways about that. 877-927-6648. Over to the oil market. Let's go take a look at oil. Oil, flat market out here today, but it really can't get out of its way. We did 144,000 contracts out here. We are trading out at 102.79, and at 102.79, you're still in the lower range. That is saying that oil wants to basically run down to this 98.10 area. So let's go back to the European Central Bank, what the take is on it. So this is what we had come out a little bit right into the close, actually. So okay, Mario Draghi is likely to signal that any interest rate cut this week won't necessarily be the final one, according to two Euro area bank officials. The European Central Bank president will probably reiterate his commitment to keep borrowing costs at present at lower levels that people said, asking not to be identified because the talks aren't public. This is a trip. I mean, they're floating this out here. And the European Central Bank really does this in a huge way. What they try to do is just jawbone. Now, what's interesting about this one is that what they're saying, Okay, while there won't be a final decision be made until June 5th, policymakers are debating a cut of 10 to 15 basis points of both the benchmark and deposit rates, the people said. The ECB is battling a prolonged period of low inflation that threatens to derail the euro's economic recovery. Bottom line, folks, I suspect you will get an interest rate cut, and an interest rate cut in itself will bring the euro lower, the dollar higher, gold lower at first, but I think that's about it. You stay right there. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had American Express down 16. Big Blue was off $1.32. You had Exxon up 45. Oxy was up 45. You had Walmart down 5. Marbell was off 24. And right now, let's go to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Basil has an outstanding show right here at TFNN every trading day, folks. Okay, 11 to 12 Eastern Standard Time. No matter where you are, you can call in, talk to him. And remember, at TFNN, we do 9 hours of live programming every trading day. You get it right on your cell phone. The way you do it in your browser, folks, is just put TFNN.mobi. If you'd like to get Tiger TV, put TFNN.com. On the right-hand side, you see a little box that has devices on it. Hit that. Our servers know what type of device you're on. You'll get Tiger TV delivered to you. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
Yes, thank you.
Cool, man. So let's see. What are we looking at out here?
We're looking at the Dow chart. This is the daily Dow chart with the Chapman wave notations.
Yes.
And just the premise of the Chapman wave is to identify the most easily identifiable low bar, and you can start a wave count simply by counting each successively higher peak, and I'll label them peak uppercase A, B, C, D, and they can go to an E and even an F. And what we've got here is that back on the 7th of March, the Dow made a top at 16,505, pulled back to 16,126 in mid-March, then ran up in 4 peaks to a peak D on the 4th of April, 16,631, pulls back very quickly once again, did the same thing as it did earlier in March, did that in April, goes to a low of 16,015, and then runs up again in a peak A, B, C, and then D, and a modestly higher high above the 16,631. It goes to 16,735. That was peak E, and it pulls back again very quickly. Now, the big question is, are we replicating the same move as we've had before, where the price holds above this purple line, the 9-period exponential moving average, and the technicals remain strong and it continues higher? In this case, all it needs to do is to go above 16,756, and that would start, I probably would think that's leg C rather than a G, so that's going to be very important, that particular level. So if you remember what last time we spoke, I said that for my subscribers, we'd gone long the QQQ because I thought that the percentage gain could be a little bit more than the S&P and the Dow. So we went long on May the 21st, and we had a very nice run-up, and at that peak D, we got out for about a 10% gain in the instrument that we used. And what we've got now is that the QQQ series has made this peak D. But when I look at the technicals, and in this case, when I refer to technicals, and for anyone who knows my show at 11 o'clock Eastern Time, as you mentioned, every day, I discuss the MACD, the moving average convergence, divergence, and the slow stochastic in great detail. And I also use that black line that you can see here. That's the 9-period exponential moving average. So at 96%, the stochastic is still very strong. And what you want to do if you're going to see a sharp sell-off, and today was really the test of inner strength or weakness, because if the QQQ series, that's the NASDAQ 100 trading vehicle, if it went under 90.64, that would have said, hey, 90.47, the 9-period moving average is going to be tested, and that's going to be really important, and you should see the stochastic pull back quite sharply. So this is actually a pretty good day, considering, at least in my work, that in leg D, the candle that confirms the peak by having a lower high bar, there should be a weak candle and then a following weak candle. So far it's held well. So we have gone cautious for my opening call. That's my daily, very comprehensive newsletter that I send out every morning starting at about 6:30, 7 o'clock. I start sending out the chart that I showed in the beginning, the Dow chart. In fact, that was the comments for tomorrow on the chart printed up. And what I do is then I add charts throughout the early morning until 8:35, where I send out my Traders Corner. So what we've done is we've started implementing some short positions, and we've got a long position, and I'm waiting to see what happens over the next 2 days. And you'd been discussing something that I've also made quite a big deal of in my opening call, and that is there are so many cross currents right here. For instance, the TLT, I spoke to you about peak D is very important in my work. Well, the TLT went to a peak D at 115.19 in a beautiful up channel. This is the daily chart that I'm showing for anyone looking at Tiger TV. There's just an up channel that started in March, and the price is just it's like a little go-kart, and it's gone to the top end, and then it's gone to the bottom end. It's just been bouncing back and forth, making higher highs and higher lows. Now what we're looking at is from 115.19 in the TLT, the Lehman 20-year T-bond fund. It's gone and just nicked the up channel, which it hadn't touched, it hadn't broken before, without immediately springing back. So tomorrow's and the next day are going to be very important, because the TLT needs to jump right back. It's at 111.55. It needs to get right back into the 113.55 or higher area. If it does that, and you had mentioned the dollar. So the dollar also, for me, is at a very important point, because it's recycled. It's gone to a leg F. It actually became an F today. But the MACD is still very strong. So all the dollar index has to do is pop over 80.68, and that could recycle that move higher. So we're at a very important phase in terms of what happens in the near term, just by a couple of points. In other words, if the dollar moves up a point to the index to 81.60 area, that's a very important level. If the TLT breaks down by 1 point from here, that's an important level. So what we've done is become a little bit cautious here, raised cash, and I think I'm just going to have to let the market tell us, because we're starting to plan our positions according to the waveforms as they occur right now. And I think being a little bit cautious is important. But when you look at a Ford, which had a very nice move, it happens to be in leg D, but it has rallied very nicely. And General Motors, I just feel that I don't want to get too bearish, even though I'm a little bit cautious right now, because these are very deep cyclical stocks, and if they're starting to act very well, then they could hold the market up, so that we get this for a few years now. We're beginning this rotational correction. So when it looks like we should be pulling back really sharply, even when the NASDAQ biotech sector just literally crashed to the downside, because they'd never seen it turn down like that, the market basically held very well. So I'm going step by step here. I don't want to get too enthusiastic on the upside. I don't want to get too enthusiastic on the downside. I think that I'm going to have to just let the market tell me. And if the Dow breaks above the high of yesterday, which was 16,756.64, I have to consider that this week we could still go higher. And if in the next day or two the Dow breaks under 16,600, then I think we've made a short-term top. So I'm just going to let the market tell us what to do. Had a nice run right now up until this moment. I don't want to get too carried away. And I think that the volatility index, the bonds, the dollar, and even gold are going to tell us a lot of information this week.
Folks, you can come over to our website at TFNN, test drive Basil's newsletter. The way you do it, go to newsletters, go to trading newsletters, the opening call, you see it right there. And, of course, don't forget, every trading day, 11 to 12 Eastern Standard Time, you can pick them up right here at TFNN.mobi. Basil, you have a great night, safe night. We look forward to the show tomorrow.
Thank you, Tom. Have a great evening.
You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We had the Dow finish down 21, NASDAQ off 3, S&Ps were flat. Let's go to George in New Hampshire. Hey, George, what's going on?
Yes, Tom. How do you foresee Draghi's announcement on Thursday affecting mortgage rates this week and next?
I don't. I mean, if you're getting a mortgage, go get it.
Okay, great.
You know, you're dealing with a 4.1 right now on a 30-year. You get a 3.3 on a 15, and, you know, you're dealing with a 3.1 on a 15, 3.3 on a 5-year arm. So that's a good scene, man.
Okay. Thank you very much, Tom.
Okay, have a great one. Have a safe one. And as one of the Tigers says, and don't hold out for an extra eighth. It's not worth it, folks, okay? The rates are there, man. They're there, and, grab it. Grab it and run, because I suspect that these bonds do want to go higher, but guess what? At 4.1 for 30 years or 3.1 for 15, that is a deal, period. Because the reality is that real estate's going up. It's not going down. So 877-927-6648. Now, let's go over. I want to go over that euro, because there is no doubt that, this we're in the probability business. But I expect what you're going to see on Thursday is high volatility in a big way. What Mario Draghi has done on a continual basis, folks, is jawbone, put plenty of rumors out like we have in this particular case, and then do nothing. Okay? So it's real possible that no matter how many, even with these two central bankers coming out right at the close today saying, hey, they don't supposed to talk, but the bottom line is that they're looking 10 to 15 basis points down, and that might not be the last one. Well, guess what? We'll see if that comes out. I suspect it's going to. The reason being is that when you take a look at the euro, what we've had is this. The last good bounce on the euro came in at 2011. That bounce got the euro up to 149. Okay? We went back down to 120. It rejected the 120, and the 120 is all the way back from 2008. That's what this whole thing is laying out. This thing is laying out at 2008, and I would say that the European officials, bank officials, are scared to death that the euro goes down to the 123. Okay? But the way it's set up right now, because of the bounce that we just had, it couldn't get a bounce going. From the last low, folks, in 2012, which was 120, the euro, very well either topped out, it could have topped out 2 weeks ago. What's this? No, that's 3 months ago. 4 months ago at 139, or it tops out this month at 139. That's what it looks like. That's about a 50% bounce in the market, which is a normal bounce up or down. The difference, however, is that what we have is that we have 3 lower lows now from the high in 2009. We have 1 lower low, which when it really got smoked down to 118. That was in 2010. This baby looks to me like it's set up that it wants to try to push into this 120 area. Now, 120 is a long way down from where we are on a currency move. We'll see how it handles the 131. I suspect 131 is going to be first. The real key is going to be, do they just reduce the interest rate? What they've also done is that they've floated a few rumors out there that they'd go negative. And what a negative bank rate would be is that they would basically charge people to put money in the bank versus, I don't see it. Because what has happened in the past with Draghi is that he just jawbones way too much. I do see their rates coming down. Now, that rate structure coming down is going to put the dollar up. And the dollar is set up really nice to go up to that swing point. Gold, as we're talking, is set up because it's an ABC structure on the way down. That, folks, that setup right there would just be a dynamite setup for the gold market. Because what gold has already done is broke the swing point. It's done it with volume. Volume is contracted now as it's going down to the December swing point. That would be 100% move for move. So we'll see how that one shakes out. Now let's talk about the S&P. What we have with the S&P is this. Oh, this is a great, I'm in. We have Mark, our bond man in the den. Oh, listen to this, man. This is so true. U.S. bonds priced in U.S. dollars will be a bargain compared to European bonds. So let's wrap our head around this. So watch this. See, oh, this is so cool, Mark. Thank you. So check this out, folks, because that is absolutely unbelievable. Because you got to figure something. So watch this. We'll just deal with the 10-year bond right now. The 10-year, okay, is yielding at 2.597. Okay. So let's go over to the UK. Well, guess what? Well, that'd be the pound. Let's go to France. France, you got 1.8. So you get 1.8, and you do buying them in euros, and euro is going to be worth less money. I'll go to Germany. You're going to pay 1.4 if euro's worth less money. Go to Italy. They'll pay 2.9. Same deal, though. Guess what, folks? You know what? You are lucky enough that you can go lend money to Spain, and they'll pay you 2.8% for 10 years, and they don't have any money. Okay? This is what they're facing over in Europe right now. The amazing part about these numbers is that when folks think our interest rates are going up, when I look at this and I go through this, it's like, why? Why are they going to go up? Do you think for a second that France, Germany, Italy, Spain, people are giving them money at 1.8%, 1.4%, 2.9, 2.8. Portugal is getting money at 3.6. Bottom line, you can, when you put this together, and you're talking all euros, you can see that our rates are going one way. They're going down. Dollars going up, rates are going down, and that pendulum is pretty intense. Actually, you know, when we go over it like this, it's like it seems like our rates are like huge. Thursday's going to be a highly volatile day out here. The market itself, okay. So if we go over to the SPY, and you talk about flattening out, I do expect what you're going to see on Thursday though is this: we're going to spike both ways. You know, there's no way that this thing's not going to just, you know, spike both ways. It's not going to be one spike higher and it just keeps going higher, or one spike lower and keeps going lower. It won't set up like that. What I would love to see tomorrow, no doubt, you know, we'll see whether let's go to Europe for a second. We'll see whether Europe gives us any hints. So right now, the FTSE still wants to go attack the high again. The FTSE closed down 27, but guess what? That wants to go attack that 94 high, and right now you're at 36. The DAX in Germany is that wants to attack a high too. And that would totally make sense, by the way, because what does happen is that their rates go down. Bottom line is that they'll push right up into those highs. So that little baby, if we go take a look at France, and France is totally, I'm telling you, Europe in itself, folks, has a million problems going on at the same time. The largest one, of course, is that the unemployment is huge. What is happening in France right now, and this is where this is going to get really intriguing. If you saw the Journal this morning, what's going on in France is that, you know, supposedly we're supposed to have some restrictions against doing business with Russia, but guess what? France is selling them lots of arms. So much for restrictions, right? It's not even close. So, 877-927-6648 now. Let's go take a look at the XAU and the HUI. XAU, this is how the XAU is set up right now. We're at 84.98. That little baby wants to go test that 81 level. That's the December lows. That December low, and that also sets up with the A to B equals C to D on the structure, the ABC structure on the way down. If we go take a look at the Gold Bugs Index right now is at 205, and it sets up at $1.90. The amazing part, and I love them when they set up like this, folks, the A to B equals C to D is set up at the December lows, and what also happens is this. You have an ABC finishing. You have a 100% move of a move, meaning that when we came off the lows in December, we went from the HUI, went from 190 up to 260. 261. 100% move a move, goes all the way back down. The amount of volume we have at that low in the HUI is astronomical. You're talking about 76 million. We're coming down right now on about 16 million. On the weekly basis, let me just see. I'll put this on the weekly first, and I'll give you the monthly. So on the weekly basis, what you have, last week we came down with about 75 million. versus that low of 145 million. That's how you like to get into those lows. You stay right there, folks. We'll be coming right back. 877-927-6648. We head to the Dow, finish down for 21. Nasdaq off 3. S&Ps, they were flat. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's take a look at some of the high-volume stocks in a low-volume market. We had out here today, Bank of America was flat. We had Broadcom up $1. Let's see, Verizon was down 76 cents. Let's go over to Verizon. Let's go take a look at some of these phone companies. So, Verizon, we did 18 million shares, down a few pennies. We put this on a monthly basis. Yeah, these equities want to go higher. These telecoms. This is a setup. So, right now, yeah, 49.20.29 we're at. I don't think this thing will break 48.38, and she's paying a 4.3% dividend. If we go over to Ma Bell, we take a look at Ma Bell. She's in a consolidation right now. She's down 24 cents. Now Ma Bell can hit $34. That's on the short term. We put this back up and we put this on a monthly. And what she's doing. Yeah, she has juice up at 39. So at 35, she has juice to 39. And she, it looks like Ma Bell is going to eventually, whether it's 5, 6, 7 months, go after those highs that are out there at $42. And right now we're at 35. And Ma Bell is paying a 5.23% dividend. So you get some big numbers out there, no doubt. It was Quicksilver today. You talk about getting killed. This equity here. It's ZQK. This got just about cut in half today. It was down 238. Stock's trading at 341 right now. This baby here, you bring this back, and what she is doing, she is going right after the 2008 low where she had a high volume low. So that's 80 cents. We're at 238 right now. Monster volume on the way down. Broke everything. First swing point would be 209. We'll see whether she can handle this 209. She can't handle 209, and she's coming down with some vicious volume. We just started the month, and she's already done, let's see. She's already done 66 million in the month, and the largest month that this equity had on the way up for the full month was 85 million. So you're talking about, what, June 3rd? 3 days into the month. This is going to make its way down here. What has happened, no doubt, folks, is that the mall, clothes in the mall, especially teenager clothes, you better be on that thing like in a huge way because these mall stores are basically biting the dust. The teenage clothing stores are biting the dust. That's what they're doing. So I'm not sure whether all the teenagers are basically shopping online also, but they're certainly not shopping in the stores that had been there. Apple. Let's go take a look at Apple. So Apple today, we're at 637. You up $8.89, and we put this on a monthly basis, and what you're going to see is this. The high in Apple, September 2012, that high, 705. The low of the high is 656. Now, the volume was only 328 million up there. So that's when Apple went from 705 straight down to 385. We take a look at the volume last month. We did 204 million, which is not even close, by the way, because you're coming into 433 million. So We'll see if it can basically get up into the low of the high. That's not that far away. I suspect this is only a test. Why? Because what we would have had last month is this. You would have had much higher volume on Apple last month if, in fact, it was going to try to bust out up into those highs. If we take a look at some of the funds that are buying Apple, because we have the 13Ds were all filed, we'll take a look at who's coming in and who's coming out. So the largest changes, there we go. So the largest changes out go like this. This is it. Now this one, these numbers here, folks, are as of March 31st. They just got reported though. April, May, June. They literally just got reported because it's always a lag. So this is dangerous for them. Okay, so Fidelity stopped moving it out. So Fidelity owns 2.9% of it. Fidelity moved out 3.2 million shares. They have 25 million left, and that, by the way, is as of March 31st. T. Rowe Price. That might be a fund, though. Well, T. Rowe Price, they moved out 2.3 million. They got 8.3 million left. Anyone else in here? You got a lot of other cells. Szechuana moved out quite a bit. They moved out 4.1 million. They only have 3.5 million left. So those are the biggest cells as of March 31st. Now let's take a look at the buy on March 31st. On the buy, you had Capital Group. This is a big buy. This is 6.4 million. That's American funds, folks, out in California, and that's a good fund company. Look at Kyle Icahn is still buying. Okay, so Kyle Icahn, last filing, bought 2.8 million. That brings him up to 7.5 million. Goldman Sachs bought 1.4. That's probably for one of their funds. That brought them up to 8.5. And Harris Associates bought 1.7. So when you look at the mix back and forth, so let's look at this big one. 6, 7, 8, 9, 10, 11, 12. So that's 12 million, just ballparking it. And 4, 7, 8, 9, 10, 11, 12. That's interesting. 13, 14. It's really about a 50-50 deal. So the sharks are after each other here on, and I added up the bigger ones, a ballparked it, but it's basically, it looks like, yeah, the sell could be 14 million, the buy is about 12, but when you get something that close, that's about a 50-50 deal. We'll see how that baby does shake out. If we're going to take a look at some of the shipping companies, we haven't looked at dry ships for quite a while. Dry ships right now is trading out at 290, and this also is not getting any zero traction. The buy on this is going to be back at 228. Interesting. Yeah, 269, 228. What you do have here, though, keep these shippers on your radar because this is what you have. At $5, this thing wants to test $5 again. When it broke topside, it did it with 450 million shares, and you're coming down at 135. A full month was 135 versus 450. Last month we only did 92. That's exactly how you want to come down into lower price. You stay right there, folks. We're coming right back. We had the Dow finish down 21. NASDAQ off 3. S&Ps were flat. We're going to be right back.